25 years ago, I owed the IRS $47,000. Back then, the agency moved slow. Letters took months. A revenue officer never showed up for almost 2 years. I had time to panic, time to ignore it, time to make every mistake before I figured out how to fight back. That world is gone. In 2026, the IRS hits you 3 times faster than they did in 2023. What used to take 12 to 18 months now happens in 6 months or less. Bank levies show up within weeks of your first contact. Wage garnishments are running on autopilot. Tax liens are getting filed by a computer before a human reviews your case. Here is what changed. The IRS hired thousands of new revenue officers between 2023 and 2025. They modernized their case management system. They built an automated collection system that runs without a human in the loop. The system does not sleep. The system does not forget you. It sends a notice, waits the legal minimum, then sends the next one. Skip a step, and the next thing in your mailbox is a final notice of intent to levy. The IRS pulled in $77 billion in net collections during fiscal year 2024. That number is up 13% over the prior year. They filed almost 197,000 federal tax liens. None of those numbers are slowing down. So what does this mean for you? If you owe $10,000 or more and have ignored 2 letters, your case is already past the first stage. You are not waiting for someone to notice. They have noticed. A bank levy or wage garnishment is sitting in your file, ready to fire on the date the system says you ran out the clock. I see this every week in my office. A client calls me on day 27 of a 30-day final notice. Their bank account gets frozen 4 days later. They thought the IRS would call first. They thought a human would review their case. Neither happened. Here is the new reality of how IRS collections move in 2026. Step 1. The IRS sends a CP-14 notice. This is the first bill. Most people throw it in a drawer. Step 2. 60 days later, you get a CP-501 or CP-503, a reminder. Still no panic. Step 3. The CP-504 shows up. The language gets sharper. The IRS warns they will levy your state tax refund. They mention property seizure for the first time. People start to worry, but most still do nothing. Step 4. The LT-11 or final notice of intent to levy hits your mailbox. This is the only one with real legal weight. You have 30 days to request a collection due process hearing on Form 12153. Miss that window and the levy is legal the day after. In 2023, this whole timeline took a year, sometimes longer. In 2026, I have watched the same timeline run in under 5 months. What changed inside the IRS makes this even uglier.
The agency now uses AI to score your case. The system checks your filed returns, your reported income, your bank deposits, and your prior compliance history. If your file shows you have assets the IRS will reach, the algorithm flags you for faster levy action. If you ignore the first 2 notices, the system assumes you will not respond and moves your file to the front of the line. A revenue officer used to phone first. Now they send a letter to schedule a visit. If you do not respond to the letter, they show up anyway. They are trained to assess your wages, your vehicle, your business assets, and your home equity in a single visit. They write a report. The report decides if your case stays in friendly resolution mode or moves to forced collection. This is the part most people get wrong. You do not beat the new IRS by waiting them out. You beat them by getting ahead of the clock. Here is what to do today if you owe back taxes. First, pull your IRS transcripts. You need the account transcript for every year you owe. Look for code 530, code 971, and code 582. The codes tell you where you sit on the timeline. The codes do not lie. Second, file every missing return. The IRS will not consider any resolution while you have an unfiled year. Not an installment agreement, not a hardship status, not an offer in compromise. Get current first. Third, run your real numbers. Income, allowable expenses, asset equity. The IRS uses national and local standards to decide what your payment should be. If your actual expenses match the standards, you have a strong case. If you spend more than the standard on cars or housing, the IRS will not give you credit for the extra. Fourth,
Pick the right resolution tool. A direct debit installment agreement is the fastest path if you owe under $50,000. A partial pay installment agreement helps if your numbers show you will not pay in full before the 10-year statute runs out. Currently not collectible status stops collections when your income barely covers your basic living expenses. An offer in compromise settles your debt for less when your reasonable collection potential drops below what you owe. Fifth, respond to every notice within 21 days. The system rewards speed. A response inside the window puts a hold on automated collection. Silence triggers the next action. The IRS got faster. Their tools got smarter. Their patience went away. If you owe more than $10,000 and you have been waiting for this to fix itself, you are running out of road. The good news is the fix is the same as it was 20 years ago. Pull your transcripts, file your returns, run the math, pick the right tool, move first. I have helped over 10,000 people through this. The ones who win are the ones who stop hoping and start filing. You have more time than you think, but less than you used to. Dean Michael, the Tax Doctor.